We've just explored a number of real actions taken by industry to move efficiency and change climate goals. Now I want to talk about the folks that are directly in the energy mix, and particularly here in China, because, of course, the emissions and the future emissions are largely being made here. So with that, Rachel, let me start with you. And I want to ask, talk to us a little bit about where you see the energy mix in China right now.
Sure. Well, really what's happening in the changing dynamics of the energy mix has been unprecedented. I think the long dominance of oil and coal is in decline. It's been clear. And I think the renewable is clearly moving from the margin to the mainstreams. There has been nowhere the change is more obvious than here in China. So if you're really looking at the energy generation capacity here in China, back in 2000, coal accounts almost for 70%. And this year, we'll go slightly down to 60%. And then the government has set very aggressive goal to bring it further down to below 50 or even further down to 30. But in the meantime, renewable goes the opposite directions. So back in 2000, it almost accounted for nothing as of the overall energy generation capacity. However, this year, it jumps to already over 22%. That's mostly in solar and in onshore wind. But with the added on the offshore, I think the goal is really kind of reach the 30% by 2030. Now, I think there are various factors that plays into this: pricing signals and competition between different fields, environmental concerns, including climate change. But also there is technology advancements and the energy diversification as a matter of national security. What we have seen in China, I think clearly environmental policy plays a key role here, that including limits the construction of the coal-fired factories, as well as subsidies to renewables, and in the meantime, continue to carry on the power sector reforms.
Now, we talked with John at the beginning about the fact that when you're moving on nuclear, you're also pulling back on some of these renewables. How much do you short-circuit that trade-off when you're in a country like China that can actually drive policy incentives the way it wants to, if it's willing to pay for it?
Well, I actually think Mr. Xie will be in a better position to answer that question from the government perspective. But I think if you're really looking at it, I think these are clearly there's certain rivalries in between the different energies. But there is also a technology feasibility. I think the big question about nuclear, particularly after what's happening in Japan, it's really the safety, the standards. But I think there will be a place in nuclear in the overall energy mix, that's for sure. The question is how safe, and then also from policy standpoints, how comfortable you are. I think if you look around the globe, I think Europe probably will be mixed. China and India, places that I think they will be continue to see some development.
Role of GE in participating in that process, and optimism as a big global private sector player that you're going to have a greater role over time?
Absolutely. You know, GE, we're the largest infrastructure company that in healthcare, aviation, and energy. We, in fact, power 1/3 of the global energy electricity generation. Just like what we always do, and first and foremost, we are committed to technology innovation. And in the renewable space, we are bringing some of the best, latest technology in the wind industry. For example, onshore Cypress platform and the offshore Haliax platform, they hold the world records of the single unit capacity. And as you know, in the wind industry, the larger the blades, the larger the rotor size, the higher the tower, the lower the cost. So our innovation has been very much focusing on bringing scale and reducing cost on the renewable space. But not only just the technology platform for the turbines, we also invested in new materials and new designs. So the carbon two-section blades that we actually implemented in our Cypress new platform for onshore, it really addresses bring the transportation cost down, because the blade usually in that space could be anywhere between 77 meters to 100 meters. It's huge. So I think when we design it, do the two-section carbon, it's not lighter, but also in two pieces, so it actually can bring the transportation cost down, but increase the flexibility. But I think in addition to that, we also are committed to making investments in our supply chain footprint, both vertically and horizontally. We acquired a blade businesses, LM, a couple years ago to really bring that into a renewable business to looking at a total cost. But in the meantime, in July this year, we made the announcement to invest in an offshore manufacturing facility in Guangdong, and we just did the groundbreaking last week. Is really to support of the overall China offshore wind growth.
Now, you, in addition to your China role, you have a global role.
Yes.
I know I didn't introduce it. But when you think about, say, India and other emerging markets in the context of what we're discussing here in China, both from GE's perspective and also your view globally, is China just, you have to get China right and everything else is at the margins, or do you see it in a more balanced fashion?
I think it's clearly, I think particularly, it's happening everywhere, particularly in renewable. I think if you really look at renewable as a major energy generation source, globally, when we look at the data, today it accounts for about 9.5% of the total power generation capacity globally. But this number would jump to 30% by 2050. Again, I mean, I think, and if you, the other factor you looked at it before, the 10 years before 2010, the major investments in the global renewable sector is mostly in Europe, 50% in Europe, and the other half is split between US and China. But just in the last decades, over 170 countries around the world have set very aggressive goals to getting into the clean energy, including renewable. But I think one difference would be China is a bit more self-sufficient. But in other parts of the world, the biggest challenge is not just addressing climate change or cutting emissions. It's really the big challenge is to addressing climate change, cutting emission, but also meeting the increasing energy demand, including universal access. Because after all, there is still about 1 billion population in the world does not have access to stable electricity. So I think one of the efforts that GE has been really focusing on, particularly in emerging markets outside China, is how do we connect to bring capacity, supply, that means including technology and services, and also financing capability to where the demands are. So I give you one example that we recently finished a wind farm project in Kenya in Africa. It's the second largest wind farm capital project. So the developer is local, Kenya. The EPC is a Chinese company, CMEC of Sinomac. GE, as an American company, is the OEM, technology and service provider. But the capital financing is led by US, but it's a consortium of various banks from the capital markets. So that example shows you today's infrastructure in a lot of the emerging markets, particularly in Africa, Latin America, and South Asia, is cross-regional. Not a single play, not a single country can really make it happen. I think you needed to bring the world capacity and then also financing access to it in order to really lower the cost to address both the climate challenge for cutting emission, but in the meantime to bring access of electricity to where it needs.
Thank you, Rachel, for covering a lot of ground there. And now let me turn it, please, to Mr. Wen. And maybe the first thing I want to ask is, I mean, given the fact that so many people looking at China are impressed and surprised with how much they've been able to accomplish domestically on, say, development of solar and on nuclear over the last 10 years. If we look 10 years in the future, you're one of the biggest energy players in this country. What do you think is going to surprise us?
I believe that in future, in terms of energy development, the focus will continue to be the renewables. In the past, in 2006, we implemented the law on renewable energy, and we acceded to the Paris Agreement. What we have achieved has been witnessed by all, including the various kinds of renewables, which have accounted for 39% of the total installed capacity. In future, the happy surprise, I think, lies in the wider application and upgrading of technologies as a way to reduce the cost of renewables or reduce the threshold of renewables so that clean and renewable energy technologies from China will serve the Chinese market, but also markets in other countries. We can provide experience and technologies in this regard. This will be the focus of our efforts in future.
And when you think about your partners internationally, as you heard from Rachel, you know, the Chinese are a little more self-sufficient than a lot of these other countries. And frankly, the Chinese are becoming more self-sufficient every day. Do you see this sector as being equally open, more open for international partnership and investment in 5-10 years' time than it is right now, and in what way?
The Chinese market is always an open market, particularly in the past 40 and 30 years. Rachel and I are not the buyer and the supplier relationship. We are also partners. We have used a lot of GE gas turbine, and we just had a meeting with the chairman of GE, and later on, we may set up more joint ventures with GE. The Chinese side will continue to open itself wider to the world. As President Xi Jinping said, that we will open wider to the world, and will continue to do the same.
Do you think that going forward, as China's capabilities increase, we have to see a lot more export, right? And we're already seeing that through Belt and Road. Do you think that China's model is significantly different in the energy mix of its exports now than it is domestically, and do you think that's going to change?
The Chinese experience can be offered to other countries as reference, but it should be combined with local conditions, especially in terms of the energy strategy, to see whether these countries are rich in resources such as oil and gas, or like China and the United States with a lot of good resources. Middle East countries have installed a number of solar energy equipments so that their renewable energy capacity will be as par with the traditional or conventional energy. Well, our experience can be taken as a reference, but we do not export our technologies or experience to other countries. They have to suit their own needs.
And I have one question. I have no idea what your answer is going to be, but I'm really interested. If there were one additional piece of policy that you could see from the Chinese government in the next 5 years that you think would help what you're trying to accomplish, what would it be?
I believe that in terms of the renewable energy, in the model development, we are exploring new models of development, such as scaling up and building up a lot of centers for manufacturing of renewable energy equipments and plants. We have delegated the power of authorization to the local level, such as for 50,000 kilowatts and 250,000 kilowatts installment capacity, so that we will raise our competitiveness in terms of the renewable and clean energy. The government can encourage the development, but the final say is the market.
Quick question for anyone on the first panel. I'm not supposed to do this, but what the hell? Given what you've just heard about expectations for China's developments over the course of the next 10 years, what you've heard from renewables, does that change in any way your view of the attractiveness of the Chinese market for your investments?
Well, China is already a big market for us.
Oh, I know.
And it's we already implemented part of our renewable strategy in China. But listening that's a priority also for the government, and ever more of a priority going forward, is good news for us, because not only it makes business sense, but it's also goes in line with what the Chinese government is trying to accomplish. And we learned here in China that one thing that's valued a lot is when we can bring experiences from around the world to China, because if there is one thing that China does a lot, is they're always willing to listen and learn from other people's experience.
Right.
And more they teach the world what to do. So, I mean, this is back and forth. So that's something that would be very welcome, like industries like us.
Pablo, you want to throw in a view?
Well, also China for us is a very, very relevant market from every point of view. And regarding sustainability and energy, as I was mentioning before, there are many, many initiatives that we are implementing in China as the first market, as it was the eco-efficient store, as it is, for example, delivering our goods through electric vehicles. So we are very much involved in China in everything which has to do with sustainability, and for sure we will continue for many, many years investing and developing our business in China.
Okay, now you've forgotten about John, but he's still there, and so we need his model back. And, I mean, from this panel, it's pretty clear that one thing we are going to see from China is a lot more renewables, right? And so given that, And given other changes in mixes in emerging markets around the world, what's an effective way to policy lever we can pull that's going to show us that change?
Well, what I heard was additional subsidies and other means to promote renewables, so let's do that. And you see that green wedge of renewables grows pretty substantially, and it's squeezing out some of the nuclear now. So it, by itself, isn't making a huge difference. But if we couple that with electrification of vehicles and of the buildings and industrial processes, heat pumps, et cetera, now we're down to 2.7. So that mattered quite a lot.